It's exciting to imagine owning a rental property, whether it's in a vacation or resort area or in a college town or just a regular neighborhood. You may be considering buying a property, hoping that it will make you rich. And many people agree that investing in real estate is a good way to build wealth. But it does not happen overnight. There are potential costs to watch out for, costs that might keep your property from having a positive cash flow, or that could even put you in the red. So stay tuned, and I'm going to share 10 of these costs with you. Hi, I'm Laura Staves with the Saltwater Shores team of Keller Williams Lone Star here in the fast-growing beach town of Port Aransas, Texas. Andrew Carnegie says that 90% of all millionaires become so through owning real estate. 90%. Sounds great, right? So how to get started? Well, we published a video not too long ago with tips for buying a vacation rental property. If you haven't already seen that one, please check it out. And please like and subscribe to our channel. We publish one video a week with valuable information on real estate in Port Aransas, as well as fun info about the latest happenings here on our little island. But today, I'd like to talk about 10 costs to watch out for so you can decide for yourself if the property you are considering buying will generate a positive cash flow. And watch this video to the end to see my number one cost of owning a rental investment property. Number 10, mortgage. And I'm sure you all know a mortgage is a type of loan used to purchase or maintain a home, land, or other types of real estate. Your monthly mortgage amount needs to be included in your annual budget. A good idea is to put together a spreadsheet of cost and include the monthly mortgage amount as well as a total annual cost so you can calculate your expenses for a year. And all of the expenses that we're talking about on this video should be put on your budgeting spreadsheet. Even if you have cash to purchase a property, you may decide to get a loan for purchasing anyway in order to leverage your money. Many of my real estate investor clients choose to do this when the interest rates are low, or at least low enough that it makes sense, because then they have that cash to use for purchasing additional property or other things. Number 9, utilities, including electricity, gas, water, internet, cable, trash pickup, and sewer. You can often find out the history of the cost of the utilities for a specific property by contacting the utility companies in that city, or at least they can give you an average if they can't give you the actual history of that unit. They should be able to give you an estimate that will help you figure out the amount for your budget. Number 8, insurance. So that's homeowners, windstorm, and flood. Not all of these types of insurance may be required. It's going to depend on the location of your property. Your realtor can help you check to see if a particular property is in a flood zone. So Port Aransas, where we are, the whole island basically is in a flood zone, but there are some areas that are at different levels. And so you might not have quite the amount of insurance that you would need if it was in a different level or different zone. So it's definitely something you want to look into. If you're purchasing with a mortgage, your lender will most likely require that your insurance be included with your loan payment, and then that's held in escrow. Number 7, property taxes. Property taxes can have a big impact on your budget and are, again, like insurance, something your lender may require you to include with your mortgage payment. Your lender will then pay that tax bill annually out of the escrow account, so you don't typically have to write a check. But that is a number that needs to be in your budgeting spreadsheet, either as a separate line item or in your mortgage amount. Property taxes are something that your agent can help you look for the tax rate of that area. Some neighborhoods are in a higher tax rate than others. Number 6, lawn maintenance and pest control. Depending on the type of property you're purchasing, you may be required to do this monthly. If you're purchasing a vacation home or condominium for short-term rental, the Property Owners Association may cover this in their fees, or it may be something that you'll be billed for separately. If you're purchasing a home that you're self-managing or planning to self-manage, These are services that you may set up for yourself, or you may require the tenant to do so. If it's a short-term property, you're going to take care of that. But if it's in a long-term rental, then the tenant may take care of that, and that would be their cost. And long-term, I mean, like 6 months or a year. Number 5, repairs. It is a good idea to set aside a budget or a reserve amount monthly to take care of any repairs or replacements of items, including appliances, hot water heater, HVAC, etc. that could malfunction. Number 4, furnishings. Many of the short-term rental properties that are sold here in Port Aransas do come fully furnished. However, at some point, furniture will need to be replaced due to wear and tear. Or, dishes, coffee pots, other miscellaneous items that are included in furnishings may need to be replaced due to breakage. So like budgeting for repairs, it's a good idea to set aside a reserve for potential replacement of furnishings. And, if you don't end up needing to spend that money for a few years, then that's just extra money you have. Number 3, permits and taxes. Many short-term rental properties will be required to have a permit that must be renewed each year. In Port Aransas, a short-term rental permit is required of all rentals of 30 days or less and must be registered with the city of Port Aransas. You must also register with the finance department for your hotel-motel tax. If you are planning to self-manage your property, this is something you will need to pay. However, many property management companies take care of this for you. The hotel-motel taxes can be charged to the renter, then paid to the city. You need to check the city regulations for the area for which you plan to purchase, or your realtor should be able to do this for you. Number 2, management fees. Most management companies in the Port Aransas area include the cost of advertising on websites like VRBO or Airbnb. Each management company does charge a different amount, and it is usually just straight out of the income. So if you don't have rentals, you don't pay. But they all have a different amount that they charge. So you want to interview several companies with a good reputation in your location. The management company pays the housekeepers and cleaning staff out of the income. So this is typically a cost that is passed through to the renter and not necessarily something you need to go in your budget. However, deep cleans are required at least once a year, and this could be an additional cost. Some condos do have a mandatory management company that you must use, and then some keep a higher percent of the income collected. So my tip to this is research, research, research. Ask all the questions. Number 1, HOA dues, which is Homeowners Association, or now they call it Property Owners Association, and then Condo Owners Association dues. This is at the top of my list because there can be high fees associated with certain properties. High-rise condo town properties often have higher dues than other condominium associations. However, the amount of income generated may be much higher and then cancel out the higher association dues. And then other condominiums may have a more reasonable or lower fee, but the property may not generate as much income. So again, this is something your realtor can help you find out. You can look at past history or have management companies give you a pro forma so that you do have a number you can expect. Some of the property owner association fees do include the cost of exterior insurance and also some utilities. So that could be deducted from your budgeted allotment for the expense category number 9 of utilities. Finding out all of this information and calculating your expense and potential income before putting a contract on a property, whether house or condominium, is something I definitely recommend. I know this sounds intimidating and like a lot of work, but it's really not that bad, and there are properties out there that will generate a positive cash flow, so it's worth it. And that doesn't include the positive appreciation that we've seen over the last several years. While that positive appreciation won't affect your income right now, it will at some point when you decide to sell or refinance or even take a cash out refi loan. Many of our investors will leverage their assets that way in order to buy more real estate, but that's a topic for another day. To quote Robert Kiyosaki, real estate investing, even on a very small scale, remains a tried and true means of building an individual's cash flow and wealth. I want to be sure it's clear that you understand the Saltwater Shores team, we're not investment advisors. Our expertise is Port Aransas real estate. And if purchasing a property in Port Aransas for either investment, vacation, or second home, or even full-time living is something you're interested in, we'd be happy to help you. So please don't hesitate to call, drop a comment below, and like and subscribe to our channel. And hopefully soon I'll see you at the beach.